what all that about. Now, if you have any questions, you're welcome to send them through via Twitter, or we'll also give you an opportunity to ask them once we open up the phone lines. But let me first of all start by introducing our panel this morning. And I'll start with my immediate left, where we have Dr. Fred Ogolla, who is a lecturer at Strathmore Business School and also a strategy consultant. Great to have you, Dr. and welcome.
Thank you.
We also have Ken Gichinga, who is a chief economist. Welcome.
Thank you.
And last but not least, we have Abby Agina, who is from our business desk and, of course, is going to be helping us as we steer this conversation. So welcome, gentlemen, and thank you for having you. And, well, let's start with, first of all, just a general scope of what has been bedeviling the banking sector. Let me start with you, Ken Gichinga. Just give us a general overview of what the banking sector has been going through in Kenya.
Thank you, Mike. I think I'd like to first start from last year, what happened last year, where we saw interest rates going extremely high. And this was a reaction to our currency account, our foreign exchange account, which was bleeding. You remember the dollar last year was at 89 to the shilling at the beginning of last year, and towards the end of the year it approached about 100. So the central bank responded by increasing interest rates so that to at least to stem that tide. Now when you increase interest rates, there's what you call auxiliary effects that happen across the economy, and banks had to subsequently lend at a much higher rate, much higher interest rate. Normally what happens is when people's interest rates are increased at what you'd call at a very high rate, you get high non-performing loans in the sector. So we began to see a lot of banking assets going bad. And this was really the origin of what we started seeing last year. So we had portfolios that were going past due, 60 days, 90 days, and banks were under extreme pressure to be able to report these. Now what happened was, as a result of this, we started seeing banks lending excessively just to be able to maintain high profitability ratios, because remember, the deposits that they are paying are also at a very high rate, so they have to lend at a higher rate to the economy. So all this started creating a vicious cycle in the economy, and that's what we started saying. The macroeconomic conditions became very, very unfavorable. Now, when you fast track that to 2016, we started seeing the numbers being reported, and we are seeing high non-performing rates. We are seeing lots of non-disclosure amongst banks, and obviously with the new governor, the new sheriff in town, we saw a lot of disclosure coming out. And obviously, in the case of Chase Bank, we saw there was a lot of non-disclosure where there was a lot of insider lending. And obviously, towards the last few days of last week, we realized that a couple of directors had taken well over 10 billion. And that creates, starts killing the confidence in the sector. Maybe I can also say banking is about trust. And anytime trust is eroded, then necessarily we see a bank run on the economy, and that's what we saw exactly this time last week. A lot of, prior to the communication of the two directors leaving the bank, we saw people losing confidence, and we saw people starting to withdraw their funds. And I have to also remind you that only 20% of deposits held by the bank are held at the central bank. Everything else is lent out. So in the event that everybody comes and at the same time, that's what we call fractional reserve banking, as opposed to full reserve banking where all the money is kept 100% at the central bank. So unfortunately, we saw those sequence of events playing out in a very ugly way and leading us to where we are. And the theme right now is how do we restore confidence back to the banking sector.
Okay. Let me come to you, Dr. Ogolla. And one would want to imagine, and maybe you could correct that if that thought pattern is wrong, that this is not something that just began last year, but it has been progressive, sort of going to the dog, so to speak. Would that be true?
Yeah, of course, you see, if you look at the issue of saying last year, there are so many people who are culpable, and in fact, even throwing the first stone at Chase Bank may not be very fair, because we find that we have auditors, we have internal auditors, we have external auditors. You cannot tell me they only knew this yesterday. We even have people who owe the bank loans, like this non-performing loans. Now, are they saying that, are they coming to also disclose, are the ones who are owing the bank this money? It's been a lot of practice. If you look at the banks that have gone down, the directors who are in these banks, the board of directors, they were not appointed last year. And there's a culture within these boards that actually comes out to play in the end. When now you see finally the bank is bleeding and is being closed, it must be a lot of historical issues that have taken place in the board. Because why should people be allowed to borrow such an amount of money internally, and we have credit officers, which means that people have not been allowed to do their work within the bank, like the credit department. Credit department should be able to ensure that they approve those things. But now, if a board of director is asking for money to be lent to him, are you trying to ask me that a credit manager will be able to make a decision whether to lend or not? It's obvious. And if you look at what is happening in the banking sector, is about that. And I want to reiterate what my friend Ken told me. I just explained about trust. By trying to distinguish some terms here which are being used, and they are having a lot of philosophical meanings. When we talk about creditors, what do we mean by creditors? Creditors simply means those who have given their money to the bank. That is the banking terms. But in real sense, a creditor means somebody who has trust on you, so he's giving you his or her money, so he's giving you credit. So if I choose to bank with KCB, or I choose to bank with CBA, when I give my money to KCB, I'm giving KCB credit, which means I credit it. I give it the credibility it requires. So now, when KCB misuses my money, and I find I want to withdraw my money from KCB, it simply means I withdraw the credit that I have on KCB, which means I lack credibility on it. And if you want to compare even what has happened with the global financial crisis, people call it global financial crisis, but the best term in strategy actually could be credit crunch. Means that there is loss of trust, there is loss of credit in the banking sector. So that simply means that there must be some banks which will emerge. So if you say going to the dogs, I wouldn't want to believe that way, because you know that Charles Darwin talked about the theory of natural selection. So natural selection means that within a population of these 44 banks, there will come banks which will be born, or banks which already exist, which will be able to adapt to this kind of situation, that will position themselves to be the best banks that can be trusted, the best banks that actually depositors can give credit. And the bank which come to position themselves that way, this is the bank that will run away with the pie in the banking sector.
Okay. Abby?
Well, I just want to first of all say it's not sort of a crisis, Mike, what's happening in the banking sector. Because as we get feedback from CBK, it's not a systemic problem. Because if you look at the banking sector, a number of the banks have been abiding to the financial reporting standards, and they've been making the right provisions. And this is anchored on the prudential guidelines that are set out by the CBK. So let's put that first to rest. It's not a big crisis as it has come out. It's just a few banks that haven't been complying. So that's the real issue happening, Mike. But moving on to the greater issues around the banking sector, if you look at Kenya's banking industry, we've seen reports saying that we are sort of overbanked. A population of 42 million having close to 43 banks. That simply means one bank to serve 1 million customers. If you cross over to countries like Nigeria, where we're talking of a population of close to 150 million plus, they have about 28 banks. So you can clearly see the disparity. So if we were to come closer home right now, Mike, the banking sector as is, I can say it is quite resilient from what we hear from the CBK and also a good number of the bank CEOs. But the big question, as Dr. Ogolla has put it out, is the issues around corporate governance, and also what Ken was mentioning about, have we let a system to fail because of a few individuals? Are we seeing the right kind of actions being taken on banking managers, Mike?
All right, let me come to you, Ken, and weighing in on what Abby has just mentioned. What would cause us as a nation to be overbanked? With that comparison you've drawn with Nigeria, where they have much huger numbers in terms of citizens compared to Kenya, yet we have so many banks. What would cause us to have that?
That's a fantastic question, Mike. It's a very simple answer: profitability. Kenyan banking sector is one of the most profitable banking sectors in Africa. I look at these numbers every day, and we look at numbers. We look at ratios such as the return on equity. These are the returns you get from a business. And Kenyan banks, about 5-10 Kenyan banks, have a return on equity of over 30%. You compare that to Uganda and Tanzania, where the returns are in the 15 to 20%. It clearly tells you there is a rush from investors to get that slice of the pie. So the question is, for how long will Kenyan banks remain extremely lucrative, extremely profitable? The question is, that depends on what we are seeing right now.
Okay.
If you're seeing the bad loans being reported, if you're seeing a crisis confidence, then we might actually go to the consolidation way. But to answer your question, it's really been the pool of the profit that has, to the extent that even the central bank sort of last year issued a moratorium on they can't license more banks because a lot of banks are
already
knocking on the
almost
door.
saturated
We
with,
almost
with banks. Dr.
saturated.
Ogolla, what would cause Kenyan banks to be so lucrative? Is it that Kenyans are very entrepreneurship minded and are giving the banks credit, a lot of credit, or is it that our interest rates are very high and as a result banks are able to reap more from from the business?
I think the banks are being very opportunistic in this sense, because if you look at the interest rate spread, like maybe Ken can actually explain to you even more, it's very high. And of course, you see, there have been people trying to say, can you regulate how much a bank should be able to make in terms of profit? So maybe there could be an issue about regulation. If you compare this across Africa, there are some profits that you cannot be able to make. If you go to the US economy, even if you go to the European economy, there are some profits which are called actually obscene profits to make in an economy. Because if you compare the profitability of some firms in Kenya, given the GDP we have, they should be completely obscene. And of course, you see now, why are banks competing on the issue of being profitable? In fact, banks make very serious provisions in these regards. Because if every bank, if you look at newspapers reports, every bank wants to report how much they have grown by 20% profitability from last year, and it becomes like a competition. Why this competition is important? Because of course, see, they have investors whom they want to pump money into the system so that they can use it for lending. And this makes them to make a lot of historical decisions which actually come to affect these banks. Because I think even my friend economists will tell you that when you increase the interest rates, for sure you'll have more non-performing loans. And how do you become more profitable? By increasing your interest rates. So banks can actually be able to say, well, we will be able to make 5 times, maybe 4 times provision on non-performing loans, but to raise our profitability. So that eventually becomes very historical problem. Like I'm telling you, the issue of the banking sector having this problem did not start yesterday. And as we continue seeing the banking sector being allowed to make such kind of profits, or if, for example, some banks really don't see the need to lower their profits, because if, let's say, one bank wants to say, for me, I'll offer lower profits, what happens? Who wants to put their money in a bank that will not be able to offer higher profits? So it's about who has power, as I told you. The most powerful person in the banking sector, or if you like by saying the financial power, actually rests on creditors, not debtors. Debtors are the ones who are actually taking a lot of money from them to make the bank more profitable, but the guy with financial power is creditors because they can bring you down. If they start to withdraw their money, you'll face what has been happening for the banking sector this time.
And well, we've had our leaders also weigh in and assure Kenyans that all is not lost, and like Abby, you've mentioned that it's not a crisis. And maybe we'll just, to refresh our minds, this is what some of our leaders had to say regarding the banking sector. Then we come back and have a further discussion. So let's just listen in.
What caught us by surprise, and I'm sure caught you also by surprise, is the inaccurate comments that were out there. That is what caught all of us by surprise. And I think you've seen some of those things. Move your money as soon as possible. You know, of course, if I get a statement like that, I have to react quickly and maybe just run down to where the bank is to see if it is still there. And this is what happened. People reacted in this sort of hysterical manner. And hence you had bank runs, which then created more people. You know, it's a sort of a snowballing effect. That's the issue.
Na ningependa niseme ya kwamba tusiwe na hofu. Banking system yetu iko imara, it is firm. Lakini mimi nataka kusema nakubaliana na governor tumempatia uhuru wa kuhakikisha ya kwamba wale ambao wanafikiria ya kwamba biashara ya benki ni biashara ya kunonesha mifuko yao, wajue ya kwamba siku hizo zimeisha.
How do an auditor comes out and gives a clean bill to a bank, and then in 1 week again, the bank goes down? Do we have cartels that are working within central bank, with the auditors, with the directors of banks?
All right, so Abby, your comments on specifically what the governor had to say, because there had been a lot of talk that mainly the banks are being brought down, and specifically Chase Bank, by the fact that social media went wild, and like you mentioned, everybody went with, the creditors went to withdraw money.
Well, Mike, I was there at that press conference, and one of the key issues the governor did raise was that social media in this day and age has also become a power to reckon with. And they didn't foresee that their decision to put Chase Bank under receivership would spark off this frenzy on social media. So he did actually accept that to some extent social media played a part. And as you know, one of the bloggers has already been arrested. So it's that interesting time we are living in, where the 21st century, social media is sort of making people even make decisions in some of their day-to-day lives. And we also saw a lot happening when we talked about Imperial Bank, where people were also caught by surprise. So it is actually becoming increasingly important for institutions to take note of what's happening on social media and how fast can they respond. And I think, Ken, looking at the spate of events around the banking sector, one of the key comments the CBK governor has come out saying that there is no bank that is not too big to fail. Perhaps, what's your interpretation of this, as well as looking at the social media component in terms of what really drove Chase Bank to where it is today?
That's a great question. What I'd like to highlight is the false notion that bigger banks are necessarily more stable. That could not be further away from the truth. If you look at in the financial crisis in the US, Lehman Brothers was the fourth largest investment bank in the US. And at the time of its collapse, it had about 25,000 employees and almost $650 billion worth of assets. So bigger does not necessarily mean better.
Too big to fail.
You can never be too big to fail. With regard to the Chase Bank incident and social media, what you've correctly pointed out is historically we've had an information asymmetry where information has been limited to within a few people and the rest of the masses do not have full disclosure. But with social media, we are seeing information asymmetry disappearing, and for the first time we are seeing people sharing ideas, both responsibly and irresponsibly. What happens is banks have to be ahead of the curve. They have to be aware. Many banks actually have a social media strategy department, normally within the marketing department, just to be able to counter that. I remember for Kenya Airways, if you remember before they posted their losses, there was a whole social media campaign on Kenya Airways is our national carrier. we need to save it. So you could see some preamble to that. We didn't see that in the banking sector, and maybe that's the direction we need to go, more aggressive communication, and customers want to understand what their money is being put to, who's the leadership in the bank. A lot of banks in Kenya, unfortunately, if you go to the website, you might not even see who the senior management is. You might not even see who the board of directors is for many banks. So that kind of disclosure creates trust, the kind of trust that Dr. Ogolla alluded to earlier. And that's what we need, just greater disclosure from a regulator, from a commercial bank, and even from government. The reality is government delays payments to suppliers, delays payments to contractors, who eventually don't service their loans with the banks, and eventually lead to the non-performing loans. It has a ripple effect on the economy. So these are collective soul-searching that is needed in the industry. But I think disclosure is the first step.
In fact, just drawing a comparison between how banks behave and other industries behave, you feel like Kenya Airways feels like they can have trouble if they really don't come to address certain matters. We have been seeing government institutions, public sector, which we thought should actually be less responsive, like KWS during the lions running around town, they are more responsive. But the banking sector have had this mentality of invisible hands. You don't know who are the directors. Some of us are coming to know who are the director of Chase Bank now when they are supposed to be arrested, when there's a crisis. And if you look at that kind of behavior, you look at the bank which believes that they are invulnerable. You know how they tackle the matters? Banks have looked very invulnerable before, because sometimes if you wanted to open an account, the kind of terms you could be told before you open an account were just sending you away. I remember myself when I wanted to go to do my MBA, it was, I had money to pay for the MBA for entire 2 years plus my accommodation, and the bank tells me, you know what, bring for us 3 months pay slip. Until I have money, they say they don't want to take my money because I'm a risk. So banks have felt that they are very invulnerable, they are invincible, they are untouchable. And this mentality, they believe that no matter what is happening in the social media, they remain untouchable. But woe to them that it became so serious. Social media has become a power to reckon with, and every bank must be able to ensure that they actually try to pacify what other people are saying, and if what Ken is saying is anything to go by, they were supposed to come and explain themselves to reduce the issue of information asymmetry. I also sit in boards whereby I'm actually trying to tell the board members, know what, we have to go to the media and show ourselves and say, we are the board of directors for this company, so that in case of anything, people know who are behind it. But if people are just saying for us, all we know is that we can be able to do internal lending, keep quiet, no disclosures, even not to disclose who you are, but the bank is there. This is something which I think social media is trying to tell the industry that they are not going to have this luxury for a long time.
Can't have it that way anymore. Now, Ken, coming back to you, one of the things that any investor would want to know is that what you're talking about, confidence, to give that bank credit. But again, it would be impractical to imagine that every investor is going to go through the books and look at how well the business is doing for you to know that this is a solid bank. What's the solution in that regard? Because obviously right now we are dealing with a nation that is panicked and wondering, and you've just told us that a big bank does not necessarily define stability. So how do I now, as an investor or somebody who wants to bank, how do I go through the process of getting confidence and now giving credit to each bank or whichever bank?
And it's impossible for every common mwananchi to go through the financials of every bank and look at those ratios. I don't think there's a simple answer to that. We could say reputation, for once. Obviously, reputation can be a proxy to good governance. Normally, where you see banks that have consistently tried to communicate to the customers what their plans are, normally that creates some level of trust. But as an investor, I would say you really have to look at the track record. Often, sometimes what is said is not exactly what is done. So you have to look at, does your bank really say what does it really do what it says? And does it have a track record of constant communication, issues around privacy of customer information, issues around integrity, issues around, I mean, even open days, you know, as Doctor says, the more engagement that the shareholders have with the customers, the greater the trust, and that can be the only way to.
Okay, so it's more of a reputation built over time.
Over time.
Okay.
Yeah.
Abby, I know through your engagement with, doing the business news and the business desk, there are terms that sometimes we throw around.
Oh, yes.
And assume everybody, is familiar with them. What are some of these terms? And maybe we could just break them down.
Okay, Mike. And maybe before we break down the terms, there's also this developing fear that the recent developments in the banking sector might spark off the mattress accounts.
Yes.
I believe you have kids, I know, Mike, and there used to be that era where we had the piggy banks.
Yes.
Where
you'd throw in coins into.
Oh yes. So perhaps I would like, before we go into defining the terms, I don't know what our guests today think about the reemergence of the mattress accounts. Maybe Dr. Ogolla?
Yeah, I would realize that if you look at the percentage of Kenyans who are banked, they say that the financial reach is 80%, right? Mm-hmm. If that is the case, somebody who has tested banking is not very easy for them to go back to a mattress. Just like before you bought your next car, you could give all excuses like, you know what, I'm just living along the highway, I can take a matatu, I can go to work.
Fuel is
but
expensive.
Once you feel expensive, but once you enter into that system, it's like it's not very easy to downgrade. And to leave a banking and to go back to a mattress is downgrading. Mm-hmm. Because it's like you are not in an ecosystem of how money is moving. So
let me redefine.
That's what I'm saying.
Let me redefine.
Yes.
We have people who nowadays have the safes in their house.
Yeah.
So there's also that element where someone can say, hey, I can stash my money in the safe.
Yeah, but you see now the option is this. When you keep your money in the safe, you have no credit history. So the guys who already have tested the banking will find that even if you keep money there, it's not even growing by 0%, even 0.1%. So the options of going back to a mattress, if you have tested, is going to be difficult. But of course, the guys who have not joined the banking sector are going to reconsider their options seriously. Some of them believe that maybe it's even good to bank with a SACCO than now to bank with a bank because some things are not known there. Mm-hmm. But I'm trying to say, in the end, there will be a bank which will come out to be the one which will distinguish themselves. Like I can give an instance. I am a board member of a company that one day paid 3 months' salary to the employees without knowing. Now, by error. So then the CFO wrote an email to the bank and said, please remove this money back to our account. So there are some banks which did that. But those who bank with a certain bank, I don't want to mention their name, had to ask the CFO that I must get the consent of your employees because the money is in the account.
It's no longer.
And it's no longer your money. So they must have consent and sign papers that money must move from their account back to your account. How does that bank distinguish themselves? You can imagine, isn't it? Mm-hmm. In fact, anybody who's banked with such a bank will say, wow, my bank cannot just make a transaction because my boss has said. So that kind of bank, which has kind of such a mentality, will position itself as the bank to go to. And it's the bank that you can trust. And that's the bank where people will give credit. Mm-hmm. And of course, if you compare with the issue of mattress banking, those who have not banked can give excuses why they don't want to go to the bank because after all people are stranded. Like if you want to pay a bill now and you're banking with a bank which is under receivership, it's a pain.
Right. Uh-huh. And also if I could weigh in on that, I think the days of the mattress are long gone.
Okay.
Just from a security perspective, you can imagine having all your money in the house. I mean, that exposes you to theft. Mm-hmm. It exposes you to a lot more risks.
Oh yeah.
For me, the more profound shift is what happened in March of 2007 when M-Pesa was created. For me, I see the movement towards M-Pesa in the fullness of time will be one of the most profound developments in the history of the banking sector over the last 100 years. And the question is, are people more comfortable with transacting via M-Pesa? Because remember in M-Pesa, all the money that you keep is fully backed. It's fully available. Mm-hmm. Unlike in banking, where only 20% of what you deposit is actually kept. The rest of the 80% is lent.
Okay.
M-Pesa can never experience a bank run, for example, and the full effect of that, I think we're even still yet to fully appreciate.
All right.
Yeah.
And I guess on a lighter note, there's somebody via Twitter who's saying here, if you resort to the mattress account, it's okay until the rats take receivership. Literally.
Good one, Mike.
Receive it, yeah.
So speaking about receivership, those are some of the terms that have been bandied around by us business journalists. Terms like bank run.
Yes.
Allow me to start with
Cash crunch.
the cash crunch. Let me start with the bank run. It's basically where we see customers rushing to make withdrawals, where they have sensed that something is not right with Bank X, Bank Y, so they quickly rush, get their money out. And a bank run can be a situation that can lead to a bank being placed under receivership to some extent, because a bank really operates on liquidity as well. And the other aspect around receivership, this is where the central bank says, hey, we need to change the management of the institution and put it under a custodian, where in this case it's the Kenya Deposit Insurance Corporation, which comes into its form, it's like acting capacity sort of, as well as trying to dig into the historical aspects around the bank and make recommendations to CBK whether this bank can actually be recapitalized, where it simply means injecting capital to sort of see the bank come back to life. So those are some of the terms that have been coming across. But away from that, Mike, let's move away from the cosmetic issues. The real question now is the insider lending that is happening in banks, where you are a director, I'm a director, we sit and say, hey, can you take a loan? How much do you want? You tell me a figure like 2 billion. I tell you, I need 2.5. And it's signed off. We get our money. There's no security to it. There's nothing in terms of how recoverable can this loan be. So this is the situation we are in. If you look at the CBK, the gross non-performing loans last year were at about 5.7%. This year, 2015, it rose to about 6.8%. So you can actually see the number of bad loans has been increasing. Looking back, the issues around Imperial Bank, away from issues to do with corporate governance, there's also issues of insider lending. And right now we are seeing Chase Bank, 16.8 billion shillings, Mike, was gobbled up. And these are sort of toxic loans that have been taken. You cannot trace the assets in terms of what security was placed under this particular loan.
Before you continue, you've just mentioned toxic loans. Does that mean that it cannot be paid back?
I would also want Ken to weigh in on this, but it's simply a loan that cannot be recovered to some extent. That's how the CBK terms it.
Yeah. Okay. Ken, some of those terms.
So should we begin? The toxic loans. So pretty much when you go to a bank and you request for a loan, let's say they give you 100,000 shillings. They create a loan account for you. There's an origination fee to that loan. And you're expected, they give you a schedule of how you'll be servicing that loan. If you miss one installment, for example, you're 30 days past due, they reclassify your loan to what they call watch, meaning this is an asset that needs to be observed a bit more closely. If you go 2 months past due, there's a classification for that. And if you go 3 months past due, then they can actually write off that loan because the probability of you paying it off is highly unlikely. And in fact, that's when the whole credit listing process is triggered with the CRB. That's when most banks engage that. So toxic loans, or what you call junk loans, are loans that have gone 3 months without being serviced or without any strategic plans being communicated on how that facility will be serviced moving forward. The issue of the bank run, it's a fairly complicated economic concept. Maybe if I could take you back in the origins of banking about 500 years ago, back in Europe, what used to happen was people stored their wealth in gold, and you would take your gold to a bank and they would give you a certificate And that certificate, you could use it to transact. And you could go to the bank and you could claim your gold
So
back.
the gold would be more like security.
It would be
collateral.
Collateral, for example. But the people who kept their gold fully realized that not everybody comes for their gold at the same time. So they had excess and they could actually lend it out and get interest on it. So that's the concept of fractional reserve banking, where all your deposits are taken to the bank, but people realize not everybody will come and demand those deposits every day. So banks realize you only need to have 20%. The rest can be lent out and can create a profit for the bank. Now the problem is when something happens, maybe there's a confidence crisis, and everybody comes back at the same time to demand for that 20%, and the rest of the 80% has been given to other people in the economy. Now that's when you create a bank run, and a bank cannot meet its obligation. The other style of banking is called the full reserve banking, where all your money is kept in the bank. None of it is lent. So even if everybody came on the same day, they would still be able to get back. But that school of thought also has its own criticisms, because it does not allow for intermediation, which the banking sector is all about. I think those are the two phrases.
Okay. Maybe come to Dr. Ogolla. One of the things that the governor had mentioned is to do with cartels.
Yes.
And the fact that there seems to be cartels that are working behind the scenes. Maybe what does he mean when you talk about cartels? Because again, from Mwananchi point of view, I would be looking at it, if there are cartels, then just deal with them legally and root them out. Why not just get them out?
Well, you see, the issue of cartel sometimes is very theoretical, and sometimes whenever people cannot explain certain things, they point out at cartels. If you look at what is happening, if you take case by case, and you take the issue of Chase Bank, you may realize that the issue there was just that there are some other, if you like, I can actually call it negative externality. Negative externality is that thing that happens to you which you didn't expect, maybe it was not intended for you, and it happened at this very time. And when all these stories started going on that there was some problem at the directorship, because we've seen that there are some things even in the press that there's a director who wrote an email to some shareholders in France, and the shareholders in France were supposed to use this information to come and buy out Chase Bank at a throwaway price from the local shareholders. So that one was now, Chase Bank was spending time on fighting on who will own Chase Bank in the end, while they're losing time to fix the bank, and when they woke up at 4 a.m. in the morning, they did not have the bank. So you can just say bad luck, and in strategy and decision making we say time is a very important factor. The guy who has more time has advantage over the other. So when you're wasting time on what is not the critical decision you're supposed to be taking, like in class I tell my students that sometimes you have to know what is the main problem you want to focus on. You could have 10 problems, but you have to ensure you focus on the core problem. Now, if I can give you an analogy, I'm not a medical doctor, but you know that a patient can have a heart disease, a patient can have a kidney disease, and then a patient can have a head problem. Now, which one do you tackle first to ensure you salvage the patient? Here, the bank went for the wrong one. Because you see, the issue was that there was a kidney problem. The dialysis had to be done. There was a cash problem. That is a kidney problem, because kidney is the one which makes the whole system clean. So instead of focusing on fixing the kidney, they allowed the kidney to start affecting the heart. Now management, you could see rumors moving around. In the end, now it affects the head, and the patient is lost. So you must know that when a patient comes to you, which is the organ that you need to tackle first, that by the time you focus on that organ, you don't lose the entire patient. So I just think that was bad luck by them focusing on the wrong problem. They are focusing on shareholding, yet they are supposed to focus on fixing the cash issue which was at the bank as they manage the PR, and then later now you can fight your boardrooms, because if you are fighting boardrooms, you wake up tomorrow and find you have lost the company, so there's even no need of talking about boardrooms.
Absolutely.
Yeah.
The other thing, Ken, would be the fact that this insider lending that has crippled some of the banks, it's not just Chase Bank, but it seems to be something that is growing. One, is it illegal? And if it is, why not just have it stopped and at what point should it have been discovered so that it is stopped?
First, I would say it's not illegal, because the shareholders are also customers,
Right.
in a sense, to the bank. So they have a right to access credit. The Banking Sector Act of 2012 creates the provisions of how much lending can happen internally. And most banks respect that like a religion. What happens is sometimes when you don't have full disclosure, sometimes you might have maybe directors hiding behind shell companies, and that money going to shell companies and sort of being traced back to them. So it's not a direct sense, it's an indirect. If you account for that, sometimes it can be a major risk. But there's something called what we call the Basel framework. So just going back to 2007, when we had the global financial crisis, a lot of the top banking experts came together in Switzerland, the place called Basel, and created what they call the Basel I, Basel II, and Basel III prudential guidelines. These are guidelines just as to how much credit can be channeled to various aspects of the shareholding or to external customers. Typically, no bank can lend more than 25% of its core capital to a single agent because of just the concentration risk. If that agent goes down, then the whole bank, the loan book of the bank is under duress. So it's legal, but it needs to have deeper, what we call deeper regulation around it, and especially in the indirect post, not even the direct post. Yeah.
Okay. Abby, maybe coming to you, maybe, I don't know, as we try and sort of wind up on this particular banking crisis in Kenya, because I wanted us to touch a little bit on this headline, the 680 billion borrowed in 1 year by Kenya, and what effect that has on us, what it means to us, because sometimes these figures are right there, they sound huge, but really what does that mean to me? But maybe as you wind up on the banking sector crisis that we have, or rather you said it's not a crisis, the banking sector conversation that we have. Let me just be clear.
All right. Yeah, the banking developments really.
Yes.
I think I'd like to also concur with Ken on the issue of insider lending. Perhaps before I give my wrapping comments on the banking sector, I'd also be curious to find out this form of reckless lending that has been happening in banks. It has a huge toll on an institution like what we saw with Chase Bank, where the directors gave out close to 6.8 billion shillings to companies linked to them. And then over and above that, the directors also were able to approve other loans in the range of close to 5 billion. Perhaps as an economist, Ken, looking at this pattern of insider lending and the disclosures, what ought to have happened in the real situation so that we nip at the bud of this issue?
Anytime you lend, you need to have corresponding collateral. And anytime you hear that directors are receiving unsecured loans of a certain amount, it means that if things went terribly bad, there'll be no corresponding collateral to account for. And that's the biggest thing that you have to, it's not really the lending, but is it secured so that on the bank's balance sheets there is an asset and a corresponding liability contained. And I think that was the biggest issue, that's the biggest issue happening right now. How much unsecured lending can you give, not even to an outside, not even to an insider, but even to an outsider without the bank being exposed to the risk? Second of all, as I said, it's the central bank. They really have to up their game, because as Professor said early on, this has been happening for the last 10 years in some banks. For example, the central bank has been there for the last 10 years. Maybe we have a new governor now, but everybody else has been there for the last 10 years, and we need to sort of understand what is it that prevented them from seeing such, what you'd say, differences between banks' balance sheets, and why wasn't that called into account earlier on? Of course, it's the issues of the auditors too. The auditors have been part of this for the last
but ISPAC has come out, Mike, defending auditors, saying that they weren't quite part of the process, which is quite ironical.
I would say the role of auditors needs to be clearly understood by the public. Because I think when you talk to the common mwananchi on the street, they'd expect you to say that the role of an auditor is to raise a red flag anytime a bank's books are not in order. But when auditors use very complicated terms like to give a qualified opinion, a qualified opinion means that the auditor does not fully understand what's happening in the books banks. That can mislead a general public, because the public can believe a qualified opinion is qualified. And it's been published. So I think just back to, as you say, breaking things simpler for the common mwananchi. People need to understand what's full disclosure. What do we mean by full disclosures? What do we mean by this difficult terms like a qualified opinion? Does a normal investor, a normal chama that is buying stocks in the banking sector, do they understand what a qualified opinion means? A lot of people don't understand. So it's simplifying and, as you say, just making things in a more transparent way.
Yeah, but just on that, I think there's something here that I would like to bring to your attention that I don't think is being done very well. Because the guys who have suffered of no fault of their own are the depositors now. They have not been told what way next. And it's not very clear, and I'm thinking this conversation is being missed out actually even by the governor and even the entire nation. What next for them? Because the president can say your deposits are secure, but you don't have it. You need your money now. Somebody needs to pay a bill tonight. Somebody needs to put food on the table tonight. And what is happening to them? When you're being told the bank is under receivership, what does it mean? We know you can define for us receivership, but what is the implication to the guy who has his money in that account? What is the implication to the guys who receive their salaries through that bank? What does it mean for somebody who has actually have a loan in that account? So this conversation is being missed. I think there should be kind of an advice on what's the way forward. I don't know what Ken may think about this.
Maybe to weigh in, Mike, the CBK has mentioned that they are putting up a facility that will take care of banks that are in financial distress of a fault not of their own. It's quite specific that if you are caught up in issues to do with malpractices, you're not entitled to this facility. But as you're saying, I think it's quite unfair for people to just be told the bank is under receivership. They don't know what next. The Kenya Deposit Insurance Corporation has said in the next 2 weeks, people with less than 100,000 shillings should be able to access their money. People with 100,000 plus, it might take about 3 months. So that's the conversation happening. But I totally agree with you, Dr. Ogolla, that there needs to be more clear communication, because the other day, Mike, we were speaking to a customer who's saying he had written checks to his employees, about 8 employees, they've bounced. The employees are at his desk. They're like, my landlord is on my neck. There's someone who's saying, I need to pay school fees. I mean, so guys are having to take soft loans from friends, and it's not everyone who can give you some money to help you cross over the month. So it's quite frustrating for
Abby,
the customers.
do you think if we assess, maybe I could like to ask Ken this question. I don't think that the decision to put Chase Bank under receivership was the most optimal decision at that time. I believe that central bank had other options to do. Maybe act as a lender of the last resort or a bank of the last resort to protect depositors who are by any definition very innocent. They did not know what was happening at all this insider lending. They did not know what was happening at the boardroom. And I believe that even central bank had the option that I'm sure central bank has so many people who have lined up that they want to buy a bank. And they could also have used this card as a way to ensure that depositors' money is kept safe, but the guys who are doing all these games actually can be punished by getting somebody take over their bank maybe, or at least lend the money to the bank and address the problem in a way that it has least impact on people. Because if you tell somebody they receive their money in 3 months, you tell somebody you get your money in 2 weeks, some people are not living the life that those guys who make those decisions live. Some people are living a life whereby it is that money hits my account and I want it today. And if not today, they will be suffering. Businesses are shutting down. Yesterday, I met a gentleman in a Java house, and the guy was telling me how he was been working on how to put up a system to work with Chase Bank on some cards of some payment, and he's completely stranded, paying his bills, paying his team, and he's like, his future is blocked. But he's a young man who is coming with a business. It's very sad. It's
quite sad. And maybe, Ken, as we wind that up, was that the best decision that should have been made by Central Bank, do you think?
I agree it was not. If you look at what the central bank was intended to do, what is the purpose of a central bank? Maybe we should begin from that point. Central Bank of Kenya has three functions. One is to maintain price stability in the economy, meaning that inflation needs to be contained. Second of all, it's stability in the banking sector. And what Dr. Ogolla correctly refers to as the lender of last resort. And this is pretty much the person who comes when you have no liquidity and injects liquidity into your institution. Now, the key question, I think the $1 million question is, why didn't the central bank act as a lender of last resort to Chase Bank? That's still out in the media. I think the governor said the institution is still growing, it's still developing. But I think that needs to come out very, very clearly to commercial banks. Are they fully backed by the central bank? Is the bank always ready to act as a lender of last resort? What we do know is we have customer deposits which are insured. We have a deposit insurance corporation. So Imperial Bank customers can access, I think it's up to 1 million shillings of the deposits. Now, if you had 30 million shillings, for example, and you only get 1 million shillings, but you still have to service your loan. Even if your bank is under receivership, this is what people don't understand. You still have to service the loan to Imperial Bank and to Chase Bank. So you can imagine that you're not getting any income, but you still have to service the loan. Or you'll be listed by the Credit Reference Bureau. It can be extremely unfair. That's why at the beginning I said, look, Mike, we need to do some collective soul searching on this industry. There are a lot of things that doesn't make sense. To give credit, the financial sector creates enormous wealth for the economy, creates jobs, but there are aspects to it that have been extremely mysterious and need to be fully understood by, not just in Kenya, this is a global phenomenon. If you look at the 20th century, they say if you want to understand the power, you have to follow the money. And bankers wield much more power than politicians could ever dream of.
All right, I want us now to wind up, and before we do that, the 680 billion borrowed in 1 year. Dr. maybe just break it down for us. As the Mwananchi, it is broken down here, and it says that the amount each Kenyan owes the global lender is up by 17,000 to 79,000, thanks to, but there are some who are sitting there and thinking, I don't even earn a penny. How is it that I owe 79,000 to the global lender? What does that actually mean to us as a country?
For me, lending money is not something that should worry people too much, but the issue is the value for money.
What is that money doing?
What is that money doing? For example, if you look at even Japan, you go to the US may owe China more than actually we owe anybody else. The US has a lot of debt in their books. But for us in Kenya, if we borrow that money, how much of that money exactly is going into the reason why it has been borrowed? For example, if you can borrow that 680 billion, maybe if you say you want to put it in infrastructure, now, how much of it will be on the road? For me, those are the main questions that I actually may ask. Because if there is value for money, and I am told that I owe Kenya 79,000, that money can translate to an economic value that later it won't be a big deal to pay. Even the gentleman who does not have a job, who does not earn any money, in future, this guy can actually be able to have the ripple effect because the money has been well used and take it back. But if that money does not go into what is required, for example, the investment, the money has been taken, is it being used on what it has been used for, and does it add value? Secondly, is it going to be done in a way that it's in a good time frame so that this money can start going back? So for me, that is the main problem. I'm thinking maybe by friend economists that I'm dreaming one day when we will have a country with a balance sheet. Because what is the Kenyan's balance sheet? They never report their balance sheet. I'm sorry, but it doesn't happen mostly in many countries. But if we see a balance sheet effect, that we can know what is it affecting us as a country, it will be easier to evaluate 680 billion. But if not, we'll just find people who are not in the government making statement by accusing the government for borrowing the money, and the people in the government trying to justify why the money is borrowed, but there's no truth in the two extremes. The truth could be somewhere in the middle, because any extreme view has a commonality whereby the government wants to retain power, so they'll justify everything. The other opposition may want to acquire power, so they want to make the government look darker than the government actually is, and then the truth is lost to Kenyans. Somebody really has to tell us the implications on this, on the Vision 2030, where are we going as a country? So if we don't track it strategically, where are we going against this borrowing? How much does this borrow take us where we are going? If we don't know that, this thing just a figure.
Remains just there. Ken, in terms of now weighing into what Dr. Aria said here, the issue may not be the borrowing, but what the money is going into. How do we as Kenyans follow that money trail to tell that it actually is going to benefit us over time?
Just going back to the Eurobond, for example, a lot of that money was supposed to go into infrastructure, education, and infrastructure has a ripple effect on the economy. It creates opportunities, it creates jobs, and the beauty about infrastructure is you can see it. There is no really, there's no two way about it. It's either you see the road or you don't see the road. It's either you see the bridge or you don't see the bridge. But back to the question of, is this debt sustainable? I'd like to add that in economics, in finance, you don't look at numbers in absolute. You need to look at what they call the debt to GDP ratio. And normally that's at 50%. Anything beyond 50% is a bit too much. For example, if you take a loan, a bank will look at how much income are you making, and if half of your income is going towards servicing debt, then it means that's not a sustainable ratio. In fact, for most banks, they can only lend possibly up to maybe 40% of what your income is. So the debt to GDP income right now, I think, is about around about 50%. So I think we are sort of like getting to the threshold where it might actually be a bit more difficult to service. But maybe my last caveat would be, anytime the KRA raises money from the public, the first payment has to go to servicing loans. So the bigger your loan servicing, the less you have for development. A lot of people need to understand that. The bigger the debt servicing, the less amount that is available for education, for healthcare, because you have to meet your obligations to your creditors, and that's where you said creditors are extremely powerful people because they can call their debt. I would say a lot of that money is coming from China, and for good reason. I think China and Africa have identified a mutual growth opportunity. I think Sino-African relationships are at the highest they've ever been over the last 50 years. So is it too dangerous to have too much debt assigned to one creditor? Those are the more philosophical questions that we need to ask. But I think the more practical agenda right now is, for the government, is can we roll out laptops? Can we build bridges? Can we build roads? And I think those less philosophical questions of, should we rebalance our creditor portfolio just for geopolitical certainty? Those are the kind of questions I think are less discussed in policy forums, but are more profound.
Okay. Abby, maybe looking at it, best case scenario is that this money is going to be used for what it's supposed to. And like you've mentioned, that would all make us as Kenyans benefited, and over time it'll have paid off. But now, worst case scenario is, which is what I was taught to work with, is that this, is that this money does not go into those projects that it's supposed to go to. What does that mean to me?
Really, just to echo what Dr. Ogolla talked about, as well as Ken, when this money is not appropriated in the right areas, it's a big loss for Kenya, because as we speak, Kenya has actually been poised for growth. If you look at the World Bank reports, they're saying as much as other economies are subdued in terms of falling commodity prices and also exposures, Kenya is really prime in terms of taking off. So by the fact that we are not seeing investments being made in the right ministries, in the right projects, it has a major impact on economic growth prospects. Because at the moment we are talking about growing at about 6%. Of course, Treasury is optimistic, saying we will hit that target. But if you come down to the reality, the common man is not feeling it, Mike. And just to put that figure into perspective, 680 billion being borrowed. This can actually finance county governments, the 47 of them, for about 2.5 years. That's a lot of money, Mike. If you further put it into context, it can construct 24 thicker superhighways. So it goes to show you the depth of this kind of loan. And as Ken mentioned, our current debt to GDP ratio is standing at about 52%, which is not that sustainable, according to what economists are saying, that Kenya is tinkering on that area where, hey, we need to borrow within our limits, we need to tighten our belts and live within our means. And this is an area that the KRA has also come out clearly saying that they've all, year in, year out, KRA has been missing out on its revenue collection. Is it time that the government revised its budget? So those are some of the big questions, because there is, of course, the need to invest in infrastructure. At the same time, these infrastructure projects are long-term in nature. We are going into an election come next year, Mike. We are seeing a lot of spending happening. Roads that had stalled money suddenly is coming out. And these roads are likely to be completed. And this is what experts have called election spending. That is short-term, just to please the wananchi, so that you get re-elected. So it's really a dark picture if we can borrow this much and it doesn't translate into better economic prospects, better facilities in institutions of learning, and laptops.
Standards of living.
Yeah.
All right, let's take a call from Ruth Wanjiro. Good morning, Ruth. We have a call from Ruth Wanjiro, and others are welcome to call if you have any questions. Ruth, good morning.
Good morning to you.
Yes, go right ahead.
Now, I took a loan. That is, I bought a car through State Bank.
Okay.
And they still have my logbook. Now, I don't know how I should be able to pay the loan, because now they have shut down.
Okay. Yeah, you mentioned, Ken, that the unfortunate thing is that even when a bank is under receivership, you're still required to service a loan. Now, here's a practical example. They have the logbook. They've shut down. So how does she pay?
I think we should go back to the definition of what is receivership. I think that's something we should have addressed. Receivership is an event when custody of our company's assets are transferred to a secondary party because that party is unable to meet its financial obligations. That secondary party is called a receiver. In this case, it's the KDIC. And they are the acting owners, the CEOs, if you like. So any outstanding, this is not to say there's nothing happening in the banks right now. There's actually activity happening in the banks right now. The moment the receiver comes in, he has to look at all the assets the book has, the logbooks that Ruth says, and they have to try and deal it on a case-by-case mechanism. Now the challenge is a receiver might not have the sufficient manpower or the employee size to act like the original bank. So you might find some of these cases take on extraordinarily long, or sometimes even if the court is invoked, there's a lot of some legal issues. And I think going back, this is why we said before a bank is placed in the receivership, these are the kind of things that need to be addressed, because a lot of people have their logbooks, a lot of people have their title deeds, and so they can't really transfer. But if, for example, a suitor came to buy one of these banks that's under receivership, the suitor would be able to sort of like take access to all those assets, the logbooks, the title deeds, and for the customer will be able to continue with business as usual. But sometimes the process of getting a suitor, I mean, I think Chase Bank is a very attractive bank. There's already a lineup of potential suitors, but sometimes it's the process of creating the margin acquisition process. Sometimes it takes a bit longer, and it can create the suffering of the customer.
Yeah. Okay, Dr. Ogolla, this particular case of Chase Bank, of course, we have the auditors who gave their report, and we have Central Bank who've come in, but one might be left with the question, who actually slept on the job? This should have been discovered earlier and at least averted. Who is it that slept on the job in this case?
I think that sometimes you can't put blame on one person. It looks like several people had issues. That's why I told you in the beginning that the internal auditors, they knew this. The management, now I know the Chase Bank employees are crying about their jobs and the rest, but they knew about it. Did they do what they were supposed to do? When you are told by the director to give them a certain amount of money which you believe it is not according to the policy, there is no collateral attached to it, and you know very well this will have issues with compliance, you do nothing about it. The director also made a mistake by making that kind of decision. Then also you find now when things get very bad, the external auditors also come in and make statements which are not very clear and qualified statements, and then it's a circle of things. Then the central bank comes in, and I told you that I disagreed with the position of the central bank governor. He could have done better by looking at the interests of people like Ruth. They didn't think about it, they just talk about the issue of compliance. No, sometimes we go more for compliance, but not looking about the impact that thing has on people. So you can say that there's several levels of responsibility across the board. Even for those people who have been having these loans which you go and take and they end up non-performing loans. Again, you can also say, no, why were you not prudent enough to take a loan you can afford? And of course, you see, you can't blame people because circumstances happen and change situations. Some people have even said that this Chase Bank issue is because Obama came. And when Obama came, Obama gave you how much money in SME? That money was pumped into Chase Bank because Chase Bank was the best positioned bank to actually lend to SMEs. And when the director saw the money, greed comes on board. And when greed comes on board, then the whole thing again has a ripple effect in the entire bank. So I would just say this, different levels of responsibilities across the board.
Okay.
Yeah.
Do you agree that possibly we cannot blame a certain institution in this particular incident, and possibly we don't know if there are going to be other banks, and when the governor steps in and says, look, I am doing this because there was non-compliance, would we then be suggesting that he should have maybe allowed what was going on? Because if it's non-compliance, really, it is him coming in and saying, this is my job. If you don't comply with the banking regulations, then this has to stop. He has to make a call at the end of the day.
Absolutely. I think what I'm hearing right now is the MPs summoning the former governor of the central bank to just understand how is it even possible that these banks were operating in such a manner under his tenure. To his credit, I think the previous governor played a big role in financial inclusion, the birth of M-Pesa, the birth of financial access to Kenyans. But I think the question right now is, if these things have been going on for the last 10 years, as some people say, does that previous administration, should it be held accountable? But I don't think anybody can wash their hands off this issue, including the customers who we often see are the victims. Sometimes the customers are the perpetrators, because sometimes you find people who, even with no good reason, they are not servicing their loans, they're not servicing their facilities, and creating, that mindset that this is free money once I get it. So that's the reason the Credit Reference Bureau was created, to stem that kind of attitude. So I think it's a collective responsibility that has to be addressed.
In fact,
maybe let me cut you short because I want us to take a call and just maybe speak to Selina Nyaboke. Selina, good morning.
Good morning, sir.
Yes, go ahead with your question, Selina.
Mimi ile kitu kilikuwa kinanishinda. Kuiwisha tunapewa road. Na tukipewa road hakuna approved director.
Hamna?
Hakuna approved director ya kusema kwamba road yako umechukua pesa hivi na utakuwa utalipa kwa mwezi hivi.
Okay.
Hakuna pahali unasaini, unatumia message kwa mobile. Ukienda kuuliza wapi barua approved director which percent, wanakuambia ati hawa watoi barua chochote, wewe waanze kulipa bila tulikuambia. Sasa unawauliza which rate mlinipatia. Wanakuambia hawataki kuulizwa maswali, wanataka tu waendelee kuservice loan. Already wapatia loan umechukua. unakuta ni kubwa, ukiuliza ni asset finance ama mortgage. Unakuta unapewa gari asset, lakini wanakuandikia kwa faili yako ati mortgage. Sasa tunashindwa kitu gani? Banki huwezi toa barua kuonyesha umechukua gari na umechukua muda fulani na wewe ukue na copy. Sasa tuko na gari, hakuna copy, hakuna chochote, banki ndio iko kila kitu. Na ukienda kuuliza sasa wameleta kama ni ujuki.
Okay.
Sasa saa hii panashika gari kama iko utalipa 20,000 peke yake, panashika gari hawakupatii barua, unakuta wanakutanganya wanahaya, wanachukua gari, wanakuambia mtenia anachukua. Ukiwauliza barua ya banki ile kushika gari hakuna. Ukienda kwa mtenia wanakuambia enda wakupatie barua kama umelipa. Ukija kuuliza barua hawakupatii. Ukitenia anakupatia barua vile ukupatia risiti yoyote na anachukua kama ni 20,000.
Sawa Selina, tumesikia swali, asante sana, tutakujibu hivi karibuni. Wacha tuchukue another call from Adil in Narok. Abdal Idi. Hello. And I'll request that you put your television volume off, especially as we are talking to you. Abdal Idi from Narok.
Hello, my brother.
Yes, how are you?
Yeah, it's off, right?
Sorry, please begin again. I missed that first part.
All right. Hello.
Yes, go ahead.
Hello.
I can hear you. Go ahead.
Okay, this is Abdallah Idi from Narok, yeah?
Uh-huh.
Do you know how much someone spends a day, right? This is what I'm trying to ask you. You're on a big screen, whatever I'm trying to ask you. Do you know how much someone spends on a day to go and bank and help himself, whatever, for the future use, you know? I'm so sorry, but this is furious, by the way. You cannot wake up in the morning and spend a lot of money and you are being convinced, you are doing business like me, I have an agrobate in Narok, right? And then you are playing these games that are being played with the bank, Chase Bank, whatever, everything. Do you know how much it takes someone to spend his money at everything? And then you guys are discussing on the screen and everything. Please. These people should be rotting in the jail.
Okay.
It's painful, please.
Thank you, Abdallah, for your sentiments there and comments. And I'll take another call from Kevin Okello. Good morning, Kevin.
Good morning, sir.
Yes, go right ahead with your question or comment, sir.
Mi kitu ningependa kusema ni kwamba au ni experts yuko nao kwa studio. The best thing wange analyze how economy ya Kenya inaendelea, alafu atueleze. Ukisema ati common mwananchi is not feeling the economy, but according to me, I'm just a common mwananchi, but there's something I've seen improving in my country, which I would like you to explain for us.
What is that?
It's not that you to politicians to talk everything, yet you can do it for us. We need somebody who is not a politician to tell us the truth of our nation.
Okay.
That will help us to know. Okay, kwa mfano kama Busia hapa kwetu, we have machines ya, kuna kampuni tumetaka kufunguliwa ya kutengeneza sukari. Wameweka ndani politics mpaka imesimama. So such kind of development need those people who are not politicians to tell us the truth and analyze everything in our country so that we ordinary Kenyans should know what is going on.
Okay.
That will help us. But just leaving everything to politicians will not make any sense. Okay, about the dairy Kenya iko nayo yenye wanasema hiyo. It's better you people who are not politicians to talk about it and explain everything about it in our country.
All right.
Kitu ingine ningependa you journalists to do, try your best and follow each and every development structure that the government had done.
Okay, thank you, Mr. Okello. And just to let you know that we don't have any politicians here today, unless some of you have got ambitions which you haven't told me. Abby, I don't know if you're 2017 aspirant in a certain area. I don't know.
No interest at all.
No interest at all. Okay, so yeah, let's start with Selina Nyaboke, who called in, and she seems to be being taken round and round in circles. And this might be a development issue. And when I say development issue, we're in an age where a bank loan can be approved in a matter of minutes. Right. They can give you the, what do you call it, approval via SMS. You access the money. And like she says, she even has a car. When she goes and asks for a letter, they say, no, we don't give letters. What might be going on here?
As my friend was talking about the issue of information asymmetry, there are so many things that people are not being told. And sometimes what I've seen, because sometimes I truly am a consultant, I meet managers, sometimes they usually say that information, those guys can't understand it. So they just go and tell you what to make the deal close. And after that, they don't care about you. Like, for example, for Celine, I'm sorry that you are a debtor to the bank. And these people normally don't have a lot of power, so they don't even get information. Creditors, because of the power they have, they get everything explained to them on how things will go by. So the banks are not doing very well because there's a rush for money. Like you have just been told that the banking sector in Kenya is the most profitable in Africa, if you like. And by that very fact is that there's a rush for customers. So the thing is that these guys just want to close the deal, but later they don't leave these guys with good papers. And what I can advise people like Celine is like, don't rush to close the deal, rush to ensure that you have proper documentation. Because you see, when you're rushing to close the deal, you are just thinking about, will I be able to afford, how will I be able to pay? But in the event that these kind of deals goes bad, do you even have documents? I'm telling you now that even the Chase Bank issue, there'll be so many people who have no idea even where their documentations are. And then what happens is that the bank now is the one who has the information they have. They can disclose what they want or not. So this is what puts the customers at serious disadvantage.
Okay, Ken, Abdallah Idi, they're lamenting and saying, you know, as a Mwananchi, there's a lot of pain. But also if I tie in that with Kevin Okello, who's saying, look, we have the politicians who give us one thing. And even like our headlines today, it gives us a figure, but leaves us there wondering. So maybe just to break it down and to answer Kevin Okello's question, how are we doing in terms of the economy in Kenya?
I think first to start with Selena's question and concern and Abdi Ali. I think the overwhelming response I get when I talk to Kenyans is Kenyans want to reset the relationship with the banking sector. Kenyans have been empowered. Kenyans know their rights. They know anytime you do an activity, you're entitled to some form of documentation. And unfortunately, some of these institutions have not recognized that. About 3 months ago, I tried closing an account with one of the local banks here, and I requested for an account closure document, and they told me they can't give it to me. And I found that very strange, because now you don't know if you leave that door whether that account continues accruing charges, which can actually lead you to being summoned by the
and in the event somebody
agencies.
actually misused that account and your name, then
and your
how
name.
do you,
Exactly.
how do you prove that you closed it?
Exactly. So I think with the 2010 Constitution, Kenyans are aware of their rights, and they're demanding not just from the banking sector, from insurance companies. When it comes to times of claims, a lot of insurance companies tend to dodge the claim process, but Kenyans are coming to understand that I read the contract and I know what your obligations are, and I know what my obligations are. And a lot of these institutions are not alive to that reality. The truth about the economy is Kenya is one of the most promising economic prospects in Africa. If you look at what we call, I'll just focus on 3 areas. We look at what we call the demographic dividends. Kenya has one of the youngest labor forces in the world. Actually, our median age in Kenya is about 19 years compared to China, which is about 36 years, Germany, which is about 46 years. So we have a very young, talented labor force that is very entrepreneurial and can drive this economy forward. Second of all, Kenya is a very diversified economy. So unlike Nigeria, which depends on oil, or South Africa, which depends on gold, Kenya does not depend on any particular resource. We are a service-oriented economy and highly diversified. So even that's why the commodity crisis we are seeing in the world is not really affecting Kenya as such. Then you throw in the Vision 2030 prospects around infrastructure, around LAPSET, around Konza, around the resort cities in Isiolo. That to foreign investors, and that's why the Eurobond was highly oversubscribed last year. Remember, the Eurobond was issued almost the same week that the Mpeketoni crisis were happening in Lamu, and a lot of people were saying there'll be no uptake of the Eurobond because Kenya, there's a lot of violence, but we saw the Eurobond was massively oversubscribed from the United States, from Europe, from the Middle East. So we are in a very, very opportune time to take advantage. That said, there are still what you call barriers to growth. Obviously, things around the social fabric, things around integrity, things around corruption, these are things that threaten any society's growth. And even the more economic scenarios where there's a global economic slowdown taking place, that in itself is of major constraint. So net, I'm very optimistic about this economy, but for me, issues around austerity measures that the Treasury is taking, cutting back on the budgets, or the global economic slowdowns, I'm alive to those kind of risks. But generally, I think we're in a good place.
Okay. Abby, maybe as we conclude, just a summary of the information that we have had before I read some of the comments that have been coming through. Maybe just as a summary of where we are as a country and whether to allay fears, in the banking sector. There are those who feel that possibly we're at a very bad state, given the information that we've been getting.
Many thanks, Mike. First of all, Selina's case can also be taken up through the Kenya Bankers Association. She can raise a complaint that she requested to get documentation that was not presented to her. If that doesn't work, there's also opportunity to go through the Capital Markets Authority. So those are two areas she can consider taking up. But looking at the other issues, Mike, Kenya's economy as is, we are projected to grow by 6%. And this growth is anchored on increased infrastructure spending. We've seen a lot of billions being pumped into the energy sector. We're putting up geothermal power plants in Olkaria. We are doing the port expansion in Mombasa. Recently, we are doing the upgrades of the Jomo Kenyatta International Airport. I mean, the infrastructure buzz is out there. But like my colleagues have mentioned, the issue around fiscal management, where we are seeing issues to do with corruption taking center stage, and this is sort of also pushing away investors. There's all sorts of scenarios where an investor has to be taken through a number of bureaucratic procedures. If you look at the latest World Bank Ease of Doing Business report, as much as Kenya was the third most reformed economy, we still have issues to do with just the ease of doing business. For example, getting a work permit. For example, getting a business registration. Those are some of the key teething problems that could sort of affect Kenya being on that growth trajectory where we are seeing a steady momentum in terms of the economy growing. But over and above all that, the economy is poised for good growth from the various reports we've come across, as well as just looking at even the cost of living sort of is also coming up to a sense where we're getting to a point things are likely to become better. For instance, cost of electricity costs have gone down by about 22%, and this is just one of the drastic measures that is likely to spur further economic growth for the country. And I would say we're on the right path, Mike.
Okay. Well, let me take this opportunity to thank you, gentlemen, for coming in before I read some of the comments that have been coming through. Dr. Fred Ogolla, who is a lecturer at Strathmore Business School and also a strategy consultant. Thank you. We have Ken Gichinga, who is a chief economist. Thank you for coming in. And Abby Agina from our business desk right here at Standard Group. Thank you. Thank you very much. And just to read some of the comments that have been coming through, we have Paul Otieno, who says, it is true Kenya's economy is promising, but for who when more poor people are coming up? That's a question by Paul Otieno. Perez Were says, excellent sober analysis of banking sector on Morning Express. Great panel. Well done. Thank you very much for those compliments, and to you, gentlemen. We also have Washira Gitahi, who says, accountants are being cagey and regards their work. Helpless people, they collude with firms so long as they cannot pay. We have Sam Kwale, who says, this has been a very informative discussion about the banking sector in Kenya. Thank you once again, gentlemen, and thank you also for watching and participating. Well, we're going to take a short break, but we'll be right back. And today being Thursday, we look at technology. Tech Central is where we're going to be at. And today we have a gentleman who is in the process of inventing and making drones. Yeah. So do stay with us right here on Morning Express and find out whether we're going to be flying those drones in the studio this morning. Details coming up.